Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't. Don't forget to subscribe, so let's get started. So I'm actually pre-recording this because I'm on vacation right now, but of course, one of the most popular videos in the financial community. We gotta get this out, guys. The 3 stocks that I'm buying for June of 2018. So I can't forget about you guys, but I first want to let you guys know, I believe it was the last month stock that I recommended, but it was SeDG Technologies, I want to say, ticker symbol SEDG. I'll put up a screenshot of what happened, but it jumped very nicely recently. It was up like 15% in a day. At this point, it's probably even higher. But if any of you guys did end up getting in back then, very nice returns. So I'm going to do it a little bit differently. I started looking into what stocks are down. I really like getting in like undervalued stocks, so obviously when they even rebound or grow even more, you can make a good profit there. So I was looking at different industries that are kind of getting hit, undervalued, stuff like that. So I created some spreadsheets to show you guys. So the first industry, and I'm going to tell you an individual stock after this small analysis, but the first industry that I saw was down was telecommunications. So I basically only looked at like the big guys. So the first one is AT&T. Verizon at the end was T-Mobile. I know they're possibly going through a merger with Sprint. I didn't want to look at Sprint just because I looked at their revenues and all that stuff. They've been doing pretty bad, honestly. So, but I created this spreadsheet to compare different companies within the same industry. So you could see on the left is just their stock price at this moment. Right now, I actually recorded this. It is May 16th, if you guys need to know. So that's the stock price. We're looking at their dividends. Now, telecommunication as a whole has really high dividends. You can see AT&T has over a 6% and Verizon has over a 5%. T-Mobile doesn't have any dividend. But for dividend investors, it's very, very attractive. Now, their PE, kind of as an industry, is kind of low. You could see they're all between 6 and 7. T-Mobile is a little bit over 10 at this point. And their forward PE, still very low, considering kind of like the average might be 15, 16, 17 throughout history for fair price. But AT&T right now is just over 9. Verizon's at 10.3 and T-Mobile's at almost 14. Now, the PEG ratio is a new ratio I started looking at recently, but it's a good indication to see if, well, by the way, it compares the PE ratio to the growth of the company of 5-year expected. Now, of course, this is an estimate, but it's good to look at. So under 1 is usually kind of more undervalued, around 1 is more fair valued, and over 1 is considered overvalued. So you can see AT&T there is actually undervalued. Verizon is more on the overvalued scale, and T-Mobile is just negative. So I'm not even going to look at T-Mobile anymore. It kind of fades away from the top dogs that we're looking at. But because this is a payout, a dividend stock, it's good to look at payout ratios. This compares the money that they're bringing in, their net income, to the dividends that they pay out. So 40%, around 40% of AT&T's dividends, or well, net income is paid out as dividends. So that's really safe. And same thing with Verizon, 30%. So all their dividends are pretty safe and stable. So I'll show you that was long-winded, sorry, but I'll show you snapshots of these different companies of AT&T, Verizon, T-Mobile, and stuff like that. But the first stock that I'm buying or looking to buy in June 2018, excuse me, burp, but I'm looking at AT&T personally. Now, I've been saying it since the beginning of this year, guys. I'm kind of approaching the stock market a little bit more cautiously because obviously we saw a lot of volatility. People are expecting a crash. I don't see it happening soon, but possibly in the near future. Some people are saying like before the next election. But for 2018, I think the stock market's going to end up positive. But for a more cautious play would be some dividend stocks, and like AT&T is definitely like the top dividend stock out there, especially with the 6%. Looking at the other ratios, still low, if you're looking at PE, undervalued if you're looking at the PEG, so it is attractive. Going back to their actual stock price and their chart, they are down, which makes it even more attractive. Now, telecommunications, and especially like AT&T and Verizon, they are more stable. You're not going to get any crazy growth with them. However, they are very, very low at this point. You could see this is their 1-year chart. So they are at a low, so if they even rebound, so in my opinion, this is kind of a safe play with that possible rebound in the future and that high dividend. Now, it is so stable because it's a very popular industry. Everyone uses, their services for their phones and stuff like that. New iPhones and stuff, they're using these providers. So that's why their growth isn't tremendous, because they already have that audience, their customers, but it is stable. So along with telecommunication industry, where it is kind of low, another similar industry that has been hit and is starting to rebound is the oil industry. So this is the second industry I'm looking at, and you'll find out which stock I'm looking at for the second stock after this quick analysis. So I'm looking at ExxonMobil, Chevron, that's ConocoPhillips, and BP. These are all large players in the oil industry. There is Hess out there, but they're just losing money, so I didn't want to put them on. So, again, their stock price to the left, their dividend, again, oil stocks usually do provide a good dividend. You could see ExxonMobil has over 4%, Chevron has 3.5%, ConocoPhillips has a 1.4%, and BP has over a 5%. So really solid dividends there. Now looking at their PE, ExxonMobil is around 17.5, which is around fair market price. Chevron is a little bit overvalued if you're looking at their PE. ConocoPhillips has no PE, so they're not making money, they're losing it. And BP is at 45, so highly valued. Their forward PE, instead of looking at previously, their future, ExxonMobil is just under 17, so still around fair market. Chevron is at 18, so again, same kind of level. And the other two. Now again, their PEG ratio, Exxon shows that they are fairly valued. Chevron is kind of undervalued, and then the rest are undervalued as well if you're looking at their PEG, price per earnings for growth of the next 5 years. Again, since this is kind of a dividend play, I like to look at their payout ratio. So Exxon has a 66%, Chevron has 89%, ConocoPhillips don't have nothing because they're not making money. And then BP, tremendous payout ratio of over 200%, so their dividend is not sustainable. Again, long-winded, sorry. But that's the breakdown of what we got. Again, right now I'm showing you a quick overview of the different stocks and their charts. But the second stock that I'm looking for June of 2018 would have to be ExxonMobil. Now ExxonMobil, obviously huge oil and gas company, just tremendous, really stable. You could see their chart just dropped, and they are starting to rebound. And I picked them just because they more fairly valued. If you're looking at the ratios that we just went through, I would rather have a great company at a fair value. So that's kind of why I made my decision there. And I am seeing gas prices at the pump starting to increase, especially for the summer. It's probably going up. I personally live in New York, and they're flirting with the $3 per gallon level. So again, ExxonMobil on the lower side, since we had that correction recently, it is starting to increase. Again, it's not going to have some drastic growth, but they do have those dividends as well. So you'll have that rebound and that kind of stability. So first we had our AT&T. Second stock would be ExxonMobil. Those are dividend plays. I got to give you a growth play, guys. I can't do you like that. So the growth stock that I'm looking at, the third stock, is AVAV, which is Aero Environment Inc. This is their 1 year chart. You can see very nice actually at a 68% return. Why they were very attractive to me recently was their recent drop. So this is their 1 month chart. You can see they peaked just over 60 and right now they are just over 50. So that's why I'm looking at them now. So before going into it, what the heck do they do? Well, this is a profile summary on Yahoo Finance. You could read through real quick if you like. But they are in the unmanned aircraft systems and stuff like that. They're involved with drones and stuff like that. So especially now, a lot of people are using drones. They deal with, I want to say, the military and stuff, but a huge increasing industry. So going into some statistics and financials, you could see their PE right now is 38 or almost 39 and their forward PE is 52. So it's actually really high at this point. So I'm not sure if I'm going to get in now. If it does drop, I'm definitely interested and I'm going to tell you why after a while. But you can see their 52-week change has been 73%, so have been doing very nicely. And again, if you look at that PEG ratio, almost a 3, so it is expensive. Now, why I like AVAV? For a few reasons, looking at their financials. First, I want to show you guys their income and balance sheets. So their revenues are increasing. I'm going to show you on the next slide, but their net income is doing very good. And their balance sheet is very, very nice. They have a good amount of cash. You can see right there, over 200 million. And they have no debt. It's awesome. So their balance sheet is very healthy. You can see here their net income going from just over 3, just under 9, and now they're in the 12.5 range. So definitely increasing. You can see the little charts on the right. The revenue is staying kind of constant, but you can see their earnings, that those little blue bars, are increasing very well. So that means it's actually more efficient business because it's probably dropping its expenses. So I'm on the fence with them. The company looks very awesome. Their balance sheet is phenomenal. Just the thing is they're kind of overvalued at this point. If you wanted to get into it just to see how it goes, it's not a bad idea because I do think the industry is increasing for their future, but I just think there could be a better entry point in the future. So if something happens, if it drops even lower, that would be even more attractive. So that's what I'm looking at, guys, for June 2018. 3 stocks: AT&T, ExxonMobil, and AVAV. I'm not going to say Aero Environment the whole time. I'm saying AVAV. But if you guys have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say, especially about this topic. And don't forget to subscribe to my channel, Real Life Money. I just started an Instagram account. If you guys want to follow it, link in the description. Don't forget to subscribe. So thank you so much for watching, guys, and I'll see you in the next one.